Finding supply and demand zones is tough, no doubt about it. But you know what else is tough? What you also need to get a good handle on to trade the zones correctly? Drawing supply and demand zones. Now, over the years, I've seen traders draw supply and demand zones in all sorts of crazy strange ways, most of which don't make any sense. A great example are traders who draw zones from candle bodies. Many traders draw the zones like this, yet it's totally wrong. These zones are 100% incorrect. There's no reason why price would reverse from the body. Really, there's only one way to draw supply and demand zones correctly, and that's what I'm going to teach you in this video. Ready to get started? Let's jump over to the charts. To kick this off, I thought I'd show you a quick example of how I mark supply and demand zones. That way you can see what the correct way to mark them is and learn a little about why we mark them this way instead of any other, like from the candle bodies I showed in the example. Don't worry, I'll detail how you mark the zones step by step later on. This is just to give you a quick idea of how and why we mark the zones this way. So, take a look at the zone on the chart. Let me zoom in a little first. This is what a correct supply zone should look like once drawn. Notice how I've drawn the zone to the most recent highest swing high up here. I haven't drawn it to the other highs or using the candle bodies like in the example I showed. It's drawn to the highest swing high instead, okay? This is true for all supply zones. You must draw the zone to the most recent highest swing high. That's the point where the bank sold to create the zone. As I explained earlier, the banks can only buy or sell when masses of traders are doing the opposite. If they want to buy, other traders must be selling. If they want to sell, other traders must be buying. That means the banks can only buy when price is falling and only sell when it's rising, because that's when most of the traders are doing the opposite. Now on a chart, buying or selling from the banks manifests as swing highs and swing lows. So every swing high or low you see has formed due to the banks buying or selling. The tip of the high or low represents the exact point the banks bought or sold to cause whatever rise or decline took place after. It's their entry point basically. So when we draw zones on the chart, we must always draw them to the highest most recent swing high for supply zones. For demand zones, we draw them from the lowest most recent swing low, because again, the low or high is the point where the banks entered their positions to cause the zone to form, as that was when the most number of traders were doing the opposite to the banks, buying or selling. Here's a quick demand zone example. See how I've marked the zone down to the most recent lowest swing low? This is where demand zones always originate from. The swing low is where the banks enter their largest buy positions to cause the rise and create the zone. So it's the point we need to draw the zone from, because price is likely to return and reverse somewhere near here. With that out of the way, let's move on and look at how to draw supply and demand zones step by step. So for this example, I'm going to walk you through how to draw a demand zone, the zone at the bottom of this rise. To mark this demand correctly, we first need to locate the most recent lowest swing low. That's where the banks place their buy positions to cause the zone to form, so we need to include that area when drawing the zone. In our case, the lowest swing low is this little low seen here. See this one? This is the lowest of the three swing lows in this segment of price action. Therefore, it's the point the banks entered most of their buy positions, and is the point we draw the demand zone from. On to step 2 now. Now that we've found the low, the next step is to find the point where price took off and created the zone. We need to cover the area between this and the low, as that's where price is most likely going to reverse if it returns to the zone. The takeoff point is found by looking at where price suddenly jumps higher via big bullish candles forming. For example, the takeoff point for this upswing is here. See the big bull candles? This is where price jumped higher and the main meat of the swing took place. Here's another one. Again, the takeoff point is right here. That's where price sharply increased. Keep in mind, not all zones have a clear takeoff point. Like, look at this zone. There's no real takeoff point here. Price doesn't jump higher like we saw with the other zone, it just gradually rises. These sorts of zones can be tricky to draw correctly, but in most cases there'll be some sort of takeoff point present. It just won't be made up of massive candlesticks that show a clear break higher. If you can't find the takeoff point, just mark the zone to the first new swing low that forms for upswings, or the first new swing high that forms for downswings. That'll give you a valid zone you can watch for reversals in. So on our swing, the takeoff point is here, because that's when price jumped higher and big bull candles started forming. Finally, it's time to draw the zone. We now have the 2 points we need to draw the zone correctly, the most recent lowest swing low and the takeoff point, the point price suddenly broke higher. To draw the zone then, select the rectangle tool, place it on the tip of the lowest most recent swing low, just as I'm doing. Now bring it up to the takeoff point and place it on the last small candle that formed before price took off and big bullish candles started forming, this tiny candle here in our case. If it's a small bullish candle, bring it to the open. If it's a small bearish candle, place it on the close. For those using TradingView, be sure to right click the zone and hit send to back after it's placed. The zone hides the candles within by default, so select this to make them visible again. And just like that, we've drawn our zone. See, I told you it wasn't that hard. So this is how demand zones should always be drawn, from the most recent lowest swing low up to the last small candle that formed before price took off. Note this down and practice finding the zones yourself. It shouldn't take long before you understand the process and can draw the zones automatically. Now let's do the same again, but this time for supply zones. With supply zones, we always start by finding the most recent highest swing high. In this example, that's this high in the middle. Next, locate the takeoff point, the point where price suddenly broke lower and big bearish candles started forming, down here in our case. Now, place the rectangle tool on the most recent highest swing high and drag down so that the lower edge sits on the last small candle that formed before price sharply broke lower and big bear candles started forming. If the small candle is bullish, like it is here, place the zone on the open. If the small candle is bearish, put the zone on the close. And with that, our supply zone is drawn. Simple once you know how. Now remember, this is the only valid way of drawing the zones. Any of the methods you come across that doesn't involve drawing the zones from the swing high or low to the takeoff point isn't correct and won't mark the zones correctly, causing you to lose money. This is the one true way to draw the zones properly. Practice it yourself and you'll soon start drawing the zones in no time. That I can promise you. Now, let's move on to the video most of you have been waiting for, how to trade supply and demand zones. See you in the next one.